Hello and welcome to Trading 5 Talents. In today's video, we're going to talk about how I choose stocks for the wheel strategy. But before we begin, I just want to say I'm not a financial advisor and this is not financial advice. This content is for educational and entertainment purposes only. Any trades I mention are not trade recommendations, but either an example trade or a past trade that I've made. So please don't enter into any trades that you may see here. Now let's get into the video. So how do I choose stocks for the wheel strategy? I get that question quite a bit, and all of the stuff that you're going to see here in this video is simply my personal opinion. There are several ways to choose stocks for any type of strategy, whether it's random or a very specific screening tool. But this is just my personal opinion. This is what I found works for me. And there are basically three criteria that I look for. First of all, I have to like the stock. That's one of the basic rules for the wheel strategy is don't do it on stocks that you don't like. But you should trade the wheel strategy on stocks that you don't mind holding. So you have to like the stock. If I like the stock, that probably means I like the sector that stock is in. For example, I'm very bullish on EV, which is the electric vehicle sector. So stocks in that particular sector, I would be bullish on. Now, some may perform stronger than others. Some may have greater volatility, but I have to like the sector. And then I choose a stock within that sector that I think is one of the stronger performers. I do like to avoid stocks that only have monthly expirations. I've traded stocks with only monthly expirations, and if you get stuck with them, then you can only sell covered calls that expire every month. So they don't move too fast, and you just are left holding them for quite a while, at least in my experience. So now I'm trying to avoid those stocks. So I'm looking for stocks with weekly expiration dates. The second criteria is I have to like the premiums. Obviously, the wheel strategy is an option selling strategy. So if you have very low premiums, then those particular stocks are not going to be very attractive if their options aren't going to be giving me the profit that I'm looking for. So I have to like the stock and I have to like the premium. So what I'm looking for is approximately a 2% rate of return for cash secured puts. If you want more information about the wheel strategy, there's a link down in the description. If you want more information about cash secured puts or the CSPs, there's a link also down in the description, as well as covered calls, CCs. There is a link in the description about each of these types of options trades and how I set them up for the wheel strategy. So check those out if you want more information. But liking the premiums, again, about 2% rate of return for cash secured puts, and that's again per trade. And also before I sell a cash secured put, what I sometimes do is I envision what happens if I get assigned this stock at this strike price. I look on the call side for, let's say, a week out. What are the strikes at around, whatever that cost basis is or whatever the current share price is. If it has good premiums on the put side, it's probably going to have good premiums on the call side. But I just like to make sure to see if I do get stuck with this stock, am I going to like selling covered calls on this stock as well? So I'm looking at both sides, just sort of looking ahead in terms of premium. The third criteria is I have to like the conditions regarding the stock and or the options. So that means I avoid earnings or other binary events. I've been burned a few times on different binary events such as earnings or clinical results from a pharmaceutical company. Some have gone in my favor, some haven't, but it's just too much of a risk. And so I'm trying to avoid those as much as possible because that really many times just adds a loss in my trade log. And I don't want to have that if I can avoid it. And there are definitely ways to avoid it. I just don't trade those particular stocks. And then also, if possible, I like to sell cash secured puts on red days. That is when that particular stock is down. And the reason why is because that means I can sell a put at a lower strike price because everything is going down, or at least that stock is going down. So I can start selling puts lower. And now when that trend reverses, then my put is even further out of the money. And on the call side, I like to sell covered calls on green days if possible. Now, those don't always happen, but if they do, then that's great. I do try to look for those opportunities if they're available. So if I have a choice among a few stocks of which ones I want to start trading the wheel on, and one of them is red, and the other are green, then I'll probably choose the red one and then sell a put on that. Okay, so that was 3 criteria that I like to use. And so here are 2 ideas or 2 sources that I use to find stocks that I want to trade. So the first is the 100 most popular list. I use Robinhood, and so they have a list called the 100 most popular list. There's a lot of interest in these particular stocks on that broker. And so if there's a lot of interest, that means usually there's going to be some volatility. That's good. So let me show you what this list looks like over in Robinhood. Okay, so here we are in Robinhood. I just clicked on the 100 most popular list, and you can see all of these stocks are here. So you can sort them as you wish. You can either by name, by price, by symbol. What I usually do is I do it by price. And the reason I do it by price is because I generally start on the put side of the wheel strategy. Therefore, selling cash secured puts, you have to have the cash in your account in order to start that trade. Now, if I only have, let's say, $1,000 that I can trade with, then I need to sell options on stocks that are trading around $10. So I'll sort it by price, and then I'll just scroll down here to where it's around $10. Starting right about here, NRZ, and down is probably the stocks that I'll be able to trade. And that's how I look for them. Okay. All right, the second source that I use sometimes is Barchart.com. And the reason I use Barchart is because it has a list here that is called the highest IV options list, which is the highest implied volatility. So these are the options that have, the highest implied volatility, which means their premiums are very inflated for whatever reason. With each of these lists, actually, I have to mention a word of caution is that these are just starting ideas. It doesn't mean that every single stock on these lists are great candidates for trading the wheel. This is just where I start. And remember those 3 criteria. I have to like the stock itself. I have to like the sector. I have to like the conditions. I have to like the premium. So just because they're great premiums doesn't always mean that it's going to be a great candidate for the wheel strategy. I've tried chasing premiums, and I've got burned a lot of times doing that and stuck with things that I don't want to be stuck with. I've also liked a lot of stocks, but they just don't have the premiums, so I don't trade those. So it's got to really have all of these criteria. But to get ideas, this is where I go, the 100 most popular list and Barchart, and looking at the highest IV options list. So let me show you what that looks like. All right, so here we are at Barchart, and this is, you can sign up for this and you can, get the premier version and pay for it, but I just use the free website. So I just go over to options and then look for highest implied volatility and click on that. All right, so here we are at the highest IV options list. And again, I like to sort by price, so I'll just click on price. And when you sort by price, this is the share price of the particular underlying asset, so it's automatically going to group by symbol as well. So you can see AMC is all right here. And this is what I like to use in this particular site, is I don't just look at what options I can sell puts on based on the price. I also like to look at the call to put ratio, not so much the actual metric, but just glancing at what people are trading or how people are trading with these particular options. So for example, let's look at, I'm just trying to find one that's got many of them. So let's say right here, Hood. This is actually Robinhood. And you can see there are calls that people are trading. There's puts, people are trading puts. If I'm selling a put, that means I have a neutral to bullish outlook. I want the stock to go up. But if there's a lot of puts, people think that this might actually decrease, then I don't want to enter that trade because there's a lot of people thinking that it's going to decrease. So I would try to avoid that. Over here, for example, AMC, notice how many different strike prices people are trading right now. These are all calls. So there's a lot of people believing that AMC is going to increase. That's why they're trading these calls. So if I'm going to be starting the wheel on this, this would probably be a candidate because there is some type of bullish sentiment to it. And selling cash secured puts is a bullish strategy. All right. Down here, SPRT. You can see all of these different strikes. There's quite a few of them actually, but they're all spread out. So calls and puts and calls and puts and calls and puts. So it's maybe 50-50. You don't know which way it's going to go. So this might not be a good candidate. So just because it's on this list doesn't mean it's a stock that you want to trade. Also, just because it has a whole bunch of, calls or puts or whatever direction you're looking for doesn't mean it's going to be a good trade. You also have to look at, do you like the stock? Does it have weekly options? Does it have good premiums? Are there any earnings coming up? You have to take into consideration all of these different factors and not just trade something just because it's on a particular list. So we looked at the 3 criteria, 2 ideas, and then what I do is I just have one list. So all my tickers go into a watch list on Robinhood. So when I'm ready to trade, I can just look at this list and now I can look, is it a red day? Is it a green day? Do they have any earnings coming up? Is it at the price that I need it to be, because that's how much available cash I have? I put everything into one list. And so this watch list is created in Robinhood. And many times when I trade the wheel, I'm reusing the same stocks. So I save these stocks that I have traded before into this watch list. Then I sort that list by price. Then I can edit that list as needed. For example, if the stock for some reason has just lost all its volatility, it no longer has good premiums, I'll just take it off the list. Or if the stock gets too cheap and I don't want it anymore, I take it off the list. There could be a number of reasons why you would take one of these stocks off your list, but I believe it's a really good idea to have everything in one place, and many times you'll find as you trade the wheel that you're trading the same stocks over and over. All right, so let me show you in Robinhood what this list would look like. Okay, so here we are in Robinhood. If you want to make a new watch list, just click on the plus icon. The same thing on your mobile. You can just click on add a list, type in the list name, and then create it. And then you can now, so for example, my watch list, you can edit your list as needed. So here's my list, and I sort them by price once again. And it tells you how many shares you own of each of these on your list. If you don't want it on your list, you can just tap or click this X. You swipe left, I believe, on mobile to get it out of your list. But for example, if you are wanting to add something to your list, so let's say I'm at the 100 most popular, and let's say I wanted to add Tesla to my list, you just click on the plus icon. On mobile, what you would do, you would tap on whatever stock that you were interested in, and then in the upper right corner, there's a little check icon that you can add, and you can save it to whatever list that you want. You can have multiple lists as well. For example, lists that you want to trade the wheel on, or lists that you are interested in just the stock itself. But what I would do is I would create a list that you have for all of your stocks, and that way you can go back and reference them. Also, look at the 100 most popular, look at Barchart, and then edit your list as needed to suit your trading style. So if you have any questions about this topic or selling options in general, just leave a comment down below and I'll answer it as quickly as possible. In the meantime, if you want to learn more about the wheel strategy and how I use it for lifestyle trading, click on the subscribe button and turn on the notifications so you can catch all the updates. Until next time, trade wisely and take care.